Hey guys, how are you? Vladimir here from Traders Academy Club, and this video is the weekly review of our trading systems, the SRS Pro, the Forex Triple B, and the Divergence University. So we will go over the recent trading week, and for each of the system, I want to explain some specific tips that we apply when we choose our trading opportunities using the systems. So we'll go over the Forex Triple B SRS and the Divergence University, and I will explain. Of course, I cannot cover all the instruments, all the trades here, so I will choose few, and I want to explain the specific trading suggestions, what to do when you are trading the systems. The purpose of this video is educational. So for those all of you who have the systems, that's exactly the purpose, to show what you should look to do when you use the trading systems and trading strategies in your trading. If you don't have the systems or the course and you find them as something that you can benefit using in your trading, then you can find all the information about them. The forextripleb.com, SRS trendrider.com, and the divergenceuniversity.com. You can find the links below in the description or on the pinned comment, also in the comment section. Let's begin. Okay, and of course, as always, if you have any questions, don't hesitate to ask me. I'll be more than happy to assist. So the first one would be the Forex Triple B, and on the Forex Triple B, I want to put the focus here on trend riding in terms of the Bollinger Bands, trending structures, and the pivots. Classical combination that I love the most. So let's start with New Zealand CAD. What is a trending structure? Okay, bearish trending structure, and you will see in a second how the Triple B helps us with that. Bearish trending structure is when you can combine the lower highs, lower lows, and that should be at least 3 highs and lows in the same direction. In a bearish trending structure, that means down. And then you would want ideally to get involved when the price pulls back. Ideally, you want the price to pull back to the previous highs, where it's a clearance zone. You can call it supply zone, rejection zone, whatever. Okay, so the previous highs act as resistances. And besides that, the ideal reversal strategy, pattern structure is the ABCD. Then with the break of days, ABCD and the low, trend is likely to continue, like it happens to be here. So we started with the trending structure, as you can see, lower highs, lower lows, ABCD correction, moving down. The next leg down, also same story, lower highs, lower lows, ABCD correction. And as we break down, right, this is our place to consider continuation. Now, 2 things to pay attention to when you deal with the Forex Triple B. First of all, here, the trend filter. Make sure it's with you. And second thing is the Bollinger Band. The bigger and the longer the ride of the Bollinger Bands in your clear trending structure, where the highs and lows are following to the downside and you get a pullback, the better your chances are. And the final thing, the pivot zone, the pullback back to the pivots area. And I love to combine 2 pivot areas, okay, from the current day or week with the previous day or week to create these boxes. And we have a weekly pivot zone with the previous daily, as you can see, a resistance area. So classical window here. And the break of this range and the most recent fractal opens the doors for a possible ride, and in that case happens to be a classical trading opportunity. Same happened to be with the pound dollar. Absolutely the same story. As you can see, we were riding the trend, and it's pretty clear here, more than 3 lower highs, lower lows. None of them flipped to change the trend. Okay, so the previous highs here and here become to be our rejection area. What happens next? is exactly described before. ABCD correction in trending structure. Now note this area. Attempt to consolidate, breaks down, and now retest it. Okay. From this area, you want to look on a Bollinger Band control. Look at this massive Bollinger Band, ride all the way down, and the rest is the pivots. So the daily pivot holds, daily supportive pivot from the day before holds, the weekly pivot is here, and we go above and right below that. ABCD line is broken, another classical opportunity. So is that a guarantee that there will be a profit every single time you use? The answer is no, and I hope you understand that there is no such thing as guarantee in trading. And you can see the cases like here, right? Again, absolutely classical trending structure. The only thing that was missing here is the retest of this high. Okay, because we want the retest of the highs of the structures, right? The trending structures. That was the only thing that was missing. However, look at the trending structure. It's absolutely clear, the bearish structure, right? Even on the MACD from the higher time frame, we go down, we create a momentum to the downside. And the pivots, look at the pivots. So despite not being classically from the rejection area, it's still a good opportunity. In that case, it failed, yes, but in 7 out of 10 trades on average, this technique will work for you. And you can scan back through the same thing we are doing with the Forex Triple B. Also the same things, I share all my trading ideas there in our Forex Triple B group. I share my weekly ideas, weekly instruments I plan to follow. All is done the same. Okay, so myself and the traders from my team, they all apply the same techniques, the trending structure, the Bollinger Bands, and the rejection zones in combination of, in combination with the pivots areas. So that's the Forex Triple B, and I wanted once again to remind what to pay attention to mainly. I hope it helps. If you think Forex Triple B could help in your trading, you can get it with the link below the video in the description or in the pinned comment. The next one is the SRS, and the SRS is also a trend riding strategy, but it is done differently. So the control of the SRS is on its trending direction and the momentum. The control is also considered by the SRS candles. We built here dedicated scan of SRS candles in a multi-time frame, and this is how it looks like. So for example, let's take a look on the New Zealand dollar. Okay, look at the current structure. So it was an attempt to make the move up, failed. We got this low broken, and look at this structure: lower highs, lower lows in a clear format. Okay, so same story, little consolidation and breakdown. ABCD correction right to this area. Okay, now look at the control here. Daily chart, clear bearish control, 4-hour chart. It's a missing problem with the image here, also red here. And look at this momentum and the sentiment. Okay, 2 out of 3 time frames are clearly bearish. So the rest is history. We want to see the ABCD breaking. We want to see the lows keep creating. And this is a trading opportunity that it's simply, you can say no to. And in a clear trending structure, control of the SRS candle, look on all the situation, how many bearish candles in this trending structure versus the bullish. Okay, the rest is history. Again, I'm not going to go over all of them, but you can see that keep repeating over and over again. Look at the control. Okay, what you want to see is the control. Now look here. Okay, after we flipped the trend, it was attempt to make some correction on the upside, flipped, lower lows. Now look what starts to happen: lower highs, lower lows in a sequence, right? After that, ABCD correction, range, continuation, and look where we go, all the way towards, all the way to the swing highs. That uses us as the rejection area. Now look at the how many red candles you have here, how many blue ones. Look at the higher time frames. That's exactly where the power of the SRS comes in. daily, the momentum and the sentiment. Look at that, 2 out of 3 absolutely bearish. Trending structure, rejection zones, ABCD correction. The rest is again history. Okay. Now, exactly as I said before with the triple B, will that guarantee a profit? The answer is not, because sometimes you would get absolutely, look at that, perfection, sugar, right? Structures, clearance here, absolutely amazing. And you got a beautiful ABCD here, breakout, lower lows. It looks like a guaranteed winner, but this is exactly why I show you that despite all the things coming up together, remember, it's still a market, and sometimes even the most classic setup would fail. Okay, like in that case. And you don't need to focus on making or hyping yourself with a 100% success rate. What you need to focus is on a stable 60 to 70% success rate. With anything an average of 1-to-1 risk reward, you're going to make amazing returns. And that brings me to the next one, which will be the Forex Triple, the Divergence University. And going back to the SRS, if you love the SRS systems, which is, by the way, considered to be one of the most popular among my followers and one of the most admired ones, you can follow all the information with the link below in the description or in the pinned comment. If you have any questions, don't hesitate to ask me and my team. Next one is the Divergence University. One of the classical things I love to apply. Now, Divergence University is a full course. One of the strategies I love to apply there is the following. When we have 2 false breakouts, okay? So it could be on the up or the down. The idea of the false breakout is fake low, and we go above this low again, and one more time. That's one of the things I love the most, especially when it comes with moving average divergence and important levels, because this with key factor, the risk reward ratio, and with the divergence strategies, it allows you to enjoy more than 1-to-1, an average like close to 1-to-2. Then here's what I wanted to show. Now, for example, this one failed, I think, was it dollar? Yeah, but look, this is the strategy I love to apply. Okay, we are next to the psychological level 070, and look what starts to happen: fake low, another fake low, bullish divergence screaming there on the moving averages, close to psychological level, ending wedge. It's a question of time that if the buyers take control, they will manage to do that. Okay, and with the risk reward, so we attack here with the false breakout. It's more aggressive approach, because the more conservative approach is when you have your higher highs first of all, and then you look to buy the pullbacks. But the aggressive approach gives you the chance to enjoy from bigger risk rewards. So in that case, we are going to the previous highs, and we were pretty close here. I see. No, it's not. It's not here. It's the other trade. This one simply retraced all the way down to kick our stop loss. So yeah, the strategy doesn't guarantee a profit, right? But the risk reward would make sure you are on the right spot. Once again, take a look on the EuroCAD. I mean, now this one is a deeper view here. I want to show you why we were looking for the buys there. So this is, look at the monthly important area. Look at that right here. Extremely important zone here and here. Okay. Now, by the end of the week, we were right there, right at the end of the week. And look what happens on the daily chart. Okay. If we start the on all these wedge, look where it meets us right here. So as it spikes through and pulls back, okay, look what happens next. Let's go back to the image. Okay, as it spikes through, it completes second false breakout. So one false breakout with moving with histogram divergence, and then following one more false breakout, this time with moving average divergence. We turn all the way down, and with the flip on a daily chart and a beautiful engulfing 2 false breakouts in a row, coming to the end of the divergence with the moving averages with the engulfing, and look what happens right on the engulfing. The moving averages crosses to the upside. It was the risk. Okay, so we aim the previous support that now is a resistance. It gives us enough positive risk reward, and this one pays. Now looking backwards, it was a mistake to cash out quick because this pair continued to fly, but the risk reward was pretty good and it was more than enough. Now same here with gold. Okay, we were beautifully, let me show you the level. Okay, so you see exactly why. I said before, right? Level plus divergence. Now check this out. Look at this level, look at this low. Bam, cleaned. Okay, this is the movement. 4-hour chart, divergence, moving average divergence. 1-hour chart, let's go back to the image and you will see. 1-hour chart, one false breakout, second false breakout. Right here. See that? Low, low, fake low. And same story, engulfing. Look at this beautiful engulfing right here, right with the cross. Absolutely amazing. And I told you at the beginning, like you saw, the Aussie dollar also was absolutely amazing technically. However, not all of them will work. But look at the combination. 2 false breakouts in a row, key level, moving average divergence, candle patterns. Okay. Now we aim to the previous swing high. It gives us enough risk reward, and this one delivers. Now, is it going to be always the same? The answer is no, because you can keep looking here. Also the euro franc. Okay, 1 false breakout, 2 false breakout, all moving average divergence right from a massive supportive area. Technically speaking, that should fly, right? In that case, as you can see, it didn't. So is it going to guarantee a profit? The answer is absolutely no. What will save you with this technique is this factor. If you work with only 50 success rate, okay, what will happen here is you lose one more, but you profit 1.5 or 2 or sometimes more, and this by itself guarantees you will, with only 50-50, okay, with only 50-50, and even with lower, like even if you go to 40-60, only 40% success rate with 1 to 2 risk reward. If you keep that with the divergences, what will happen here is you lose 6 times, let's 1%, let's say 1% risk per trade, okay, and you profit 2, 2, 2, 2. So you lost -6, you profit +8. Your total +2%. Only with 40% success rate. So this is the huge advantage with the divergence trick we love to apply. And remember, it's not every divergence you see. No, key level, rejection level from higher time frame, moving average divergence, 2 false breakouts. And the tick of the divergence, the trigger you got, is coming with a classical candle pattern. Usually that will be engulfing. In some cases, it might be different ones like piercing or dark clouds. Sometimes you might see some great hammer pattern there. But once you get this combination, your chances are there, and you don't need, and you will not get, don't make any sort of illusion, 100% success rate. All you need is, again, 50% success rate with positive risk reward in your favor for a longer run. That's the recipe for a consistent growth. And of course, there could be period that it's not going to be good, and could be period that everything you touch could be working out. It's all part of the statistics, and it's critical to understand all that. So guys, I hope you find this video useful and helpful as always. I hope these tips would give you some better understanding on what and how should be done. And if you don't have the trading strategy systems or the course, and you think they could be beneficial in your trading, then you can get them down below the video in the description or the pinned comment. there is option to get it free with the brokers program. So follow the links. And if you have any questions, we are here for you. I wish you a fantastic trading week ahead. Thanks for your time watching this video. All the best to you and yours. I'll see you soon with more.